Tesla from 759 to 720, and now we think going back to 759 based on a bot attack on the markets and therefore Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, please take time to like and subscribe. We also want to note that this is a copyrighted broadcast. Any rebroadcast of the information provided is prohibited. All rights are reserved. So I wanted to get a show out this morning before the markets open by a wide margin with a very specific agenda to sort of categorize what we see going on right now with Tesla and the markets in general. So as you know, what happened yesterday was that we had an initial drop of the stocks into the 500 points down. And then as the day progressed, we actually were down as much as 950 points, which was actually bringing us to near a limit down, which would have shut the markets down. So we then sort of made a little bit of a recovery, definitely on Tesla, but also on the markets in general, to be down in that 600 to 700 range. So the question is kind of what's going on here? Well, in general, what I'm arguing is that there's a process where there's a combination of news and actually market activity. And anytime that combination comes together, there's what I want to call a bot attack. So many of the hedge funds and even some of the large institutions now have new rules when it comes to investing and trading. In particular, the portfolio managers aren't asked to use their skills to analyze stocks out of the box. The general thing, I call it, is the run for the hills plan, which is all of a sudden there's a let's run for the hills or sell out everything we can instantly. And the goal here being that you avoid losing a lot of money if in fact the news that's going on represents extreme negatives. The cost of re-entering your positions that you had prior to the run for the hills plan is so low now that it's not a big deal to exit quickly, figure out if everything's okay, and then get back into the companies and stocks that it makes sense to do so. So in particular, in this case, obviously we're focused on Tesla. And the second component of the run for the hills plan is the higher your PE ratio is, and Tesla has one of the highest out there, your stock is particularly targeted for the run for the hills program of getting out before it's clearly known that there's a crash that's in the offing. So I think that this process worked perfectly yesterday. As I was getting ready to do a show yesterday afternoon, there's one little problem that popped up, which is that we actually we're in a mode of saying, hey, this is no big deal. My mode for this whole thing was the analysis of Evergrand and its demise is a valid reason to be concerned because that's $300 billion. So all of the discussion around that was really focused, and my assessment of the Evergrand was it was no big deal for several reasons. Number one, the total net number for losses for Evergrand is $300 billion. China is a country where they throw a lot of very, very big numbers around. So for example, before Tesla was brought in, China had spent as much as $80 billion attempting to jumpstart domestic manufacturers of EVs, as well as to seed the market with discounts on vehicles that would cause Chinese consumers to buy the vehicles that those organizations were producing. So at one point, there were as many as 100 Chinese manufacturers of EVs that are out there and that were trying to make a go of it using patents made open by Tesla and other methods. We're probably now down to a top 10, and interestingly, Evergrand just decided to get involved with EVs over the last 6 or 8 months, which I was very surprised by, because any company takes time to build up, but so many other Chinese entities had failed. I was sort of stunned to see this Evergrand move to try to get into the industry. And obviously it makes no sense right now because they're extremely short on cash. So after seeing the drop in the markets, my assessment was the Chinese had two choices. One, they could simply dig into their bank account and pay the 300 billion and end the issue. Or two, they could just print currency, just like the United States is right now, and exit this problem in milliseconds. So I spent yesterday trying to figure out what would happen, and my assessment of things was that the 300 billion for a company or country like China is in the department of absolutely no big deal. In fact, spinning in the back of my mind endlessly was the fact that, did you know that China is on an every year spend $50 billion to sort of build relationships and facilities in Africa to facilitate sort of access to natural resources by the Chinese? So people who spend $50 billion a year on a place that's so far away, $300 billion is chump change. And then the other flip side of this is that why let $300 billion destroy sort of the economic system you've built up? So I just really think that the Evergrand / Chinese issue is a valid issue, but if they were low on cash, it would be a huge deal. But they definitely want to protect their financial system, A, and B, 300 billion is basically pocket change for a country of that size, that bank account, and that long-term ambitions. So after I finished that analysis yesterday morning, I was kind of shocked because the markets were down 600 on the Dow, and I thought, okay, now people are going to come to their senses. And instead of that happening, we went laterally and then started going down again. So the next question was there something else analytically that was affecting what was going to happen? And the only thing I could come up with was the fact that the debt ceiling hadn't been raised by the US. So after I looked at this, I was like, hey, this is a legitimate issue. What if the debt ceiling folks decided to delay the modification of the debt ceiling or suspension of it process for another 2, 3, 4 months? Now we'd have complete economic chaos. And the logic for doing this is if you can't win in terms of the number of people, number of votes you have in the House or Senate, you can win by destroying the economy and then systematically blaming it on Mr. Biden and company. So I was playing this in my mind as a legitimate reason why there's a reason why the stock had dropped, or the markets had dropped from 600 to now 900 down, is what was going to happen with this. I then read a piece that came, I believe, in the Washington Post that indicated that the head of the Senate Republicans had indicated that they're not interested in a long-term solution to the debt ceiling, but they were willing to sign something that pushes the debt ceiling back into the December timeframe. So after I saw this, I felt like there was a clearance for, okay, China's no big deal, and the debt ceiling is not going to be an issue that destroys the economy in the short term. So that's when I sort of landed on the position that, oh, okay, I think we're in great shape here in terms of what we're going to see happen, etc. Now, what I was waiting for this morning is to see whether or not all of a sudden we got this situation where there's an aha gotcha that we hadn't thought of, but that really hasn't come out. And so I think the two components of the stool that I just described for why the stock were down as badly as they were, are pretty much under control. So therefore, I'm in the position now on everything that there's, perhaps finally an issue that we've already discussed, which is the highest PE stocks get slammed the hardest, and then they had these rapid comebacks. And so, in my mind, it's a buying opportunity for those who have the courage to do so, heading into long-term targets for the growth of their stock prices. And down 40 points yesterday, plus from 759 to 720, is kind of not a big deal, because that ground can easily be covered with people rebuilding their positions, or other folks who've been waiting for access points at lower price points were able to do so. So I would say that congratulations to the folks that are clear-headed about when to buy in, because clearly this is it's valid to be prepared. It's valid to have the mechanism to respond quickly to what's going on in the market. In fact, I highly recommend that you consider even putting some stop losses in there, 20 or 30 points below where the stock price is, hence the 750, 700. It's not a bad thing to be prepared. I just think that shocks like we just saw will become more routine than not, because of the power of having computers automatically trade you out or push you out of trades, and then you let the dust clear, and then those managers can go back and rebuild those portfolios that they already had. I guess the one last thing that I've been wondering about and wondered about all yesterday is, if you look on CNBC or any of these advertising spots, there are large numbers of sort of pundits that have been discussing 20% drops in the stock market driven by unknown forces, which I thought this might be one of them as we were dealing with it yesterday. The problem I'm having, so it's valid that the market could drop 20%. There's a process that goes on. And so let's take, I know Calpers pretty well, which is one of the largest pension funds in the globe, and understand a little bit about how they work. And one of the things that happens is that, let's say for giggles, every month Calpers gets $30 to $50 million from future retirees that needs to be invested. Once that money comes in the door, they don't have a choice. On the first, that money is going to be allocated out to the money managers, who all control that. And the rules under which they've agreed to allow the money managers to manage that money are now in play, which is like, if they're a bond fund, you've got to invest in bonds, and under these parameters, and if it's in a stock, you have to invest in them. So one of the problems that does happen, and I think is associated with the 20% drop, is that you have a situation where why should I hire you as a money manager if you're going to keep the money in cash? Answer, yeah, that doesn't make sense. So the next point is, okay, if you do have the cash, what are you going to put it into? Well, the answer is, we have a select group of stocks that we're targeting because the PE ratios look like good values, and therefore we pour our money in there. Well, the next problem that pops up is, what happens when the PE ratios exceed what's appropriate for that company, given what, so with a PE ratio, it's the price, it's the amount of earnings times the growth rate of the stock equals the PE. We have a book by Peter Lynch below that explains how all the stock prices generally are arrived at. So the problem that's popping up is, if you've chosen the good companies and you've continued to pump money into it consistent with your covenants with the large pension managers that you work with, what do you do when you exceed what's logical in terms of the buying price? Well, the answer is, you stop buying those stocks per se, and you start buying other stocks whose PEs haven't become overly inflated. The problem, though, that happens when you go to those stocks is the reason you didn't buy them in the first place is they're not growing very fast. They're, sort of flatline to down in terms of 2% growth rates per year. It's just not a good place to put money because they don't have the growth rate that justifies. But their PE is way better than the high PE stocks, perhaps like Tesla, but more like, let's say, Amazon, et cetera. So there's this dilemma that happens. So as a result, the money manager will just step back and say, hey, we don't want to do it. But what we're going to do is start pumping money into companies that do not have justification for a high PE. So this is where the huge market drops tend to occur. When all of a sudden companies that shouldn't, GE for example, companies that don't have a high growth rate start getting high growth rate PE based on how their stock price has been pushed up. So you now have this interesting problem where there are companies that can justify the PE they have and therefore the price of the stock, and there are others that can't. And so all of a sudden, there's a bell that rings that says to the money managers, hey, those guys have an unjustified PE times the number of companies. We're going to justifiably start shorting or take them down. And in the short term, we'll take the companies with the good or valid PEs relative to growth rate and the price of the stock. We'll wipe them out too. So now you have this interesting problem of, hey, this, I want to say, is a disaster for great companies like Tesla, which is they've got the growth rate, they've got the demand for product, everything is fine. It's just that the stock market is not willing to give them the real value that they've arrived at because everybody's worried about being the first one out the door once the changing of the PE process is working. And so I believe that's what happened yesterday. And for those of you who are Tesla fans and watch our show, I think that this is going to happen again, and having cash ready to jump in is a wise move because of how the phenomenon works as I just described. So I really think the markets are going to remain nervous. I think the Chinese government is going to articulate how they're going to deal with the Evergrand situation. And as I said, they got plenty of money and they got plenty of ability to print cash. So I don't think this is a big deal. A final note here, and we're going to be doing a show on this thoroughly, is that I just think that China is in an interesting position right now because they're establishing firm control of everything and sending billionaires to jail as part of that process. And so I just think that we're currently in a what is the new China going to look like zone. And there's been a lot of craziness going on to establish what that means. But having the CEO of Alibaba jailed and then in a camp for re-education, and the same thing happening with several other billionaires, China is in a changeover situation about how things are going to work in the future. So I think everybody's on alert for, well, are you going to do something different than logically makes sense? And we haven't gotten an answer to that yet, but we will soon. We will see it play out. One example that I just want to throw in before doing that show is that the folks in Australia were one of the leaders in trying to figure out what happened during COVID in terms of how it started. And we're requesting that there be an investigation of what happened in that lab in China. What then happened is the response that the Chinese gave was that they stopped buying coal from Australia. And this created a crazy situation where all the coal that had been dug out in Australia was now being dumped on the market elsewhere because the Chinese weren't taking their coal deliveries, and you had large numbers of ships sitting there for months waiting to offload, and the Chinese wouldn't allow it. So this is an example of it's non-economic for them to do it, but they did it because they wanted to punish the Australians. And so we're kind of learning bit by bit what the new Chinese process is going to be. But in the meantime, it can be some craziness in terms of how it happens. And I think the world is on alert for jumping ship if in fact it doesn't work, as planned, if you will. So we'll keep you posted. I think there's a lot to learn and observe here. I wanted to remind you that we actually do have a few SpaceX shares that we just got us allocated. We also want to please hit us up on FCP180OL, the email address below. We also wanted to note that this is a copyrighted broadcast. Please take time to like and subscribe if you enjoy the show. This is now our health portion. In our health space today, we've decided to cover, as usual, wanting to encourage you to get out into nature and do some what's called forest bathing. Just get out there and enjoy nature, walking, biking, hiking. It doesn't matter what it is, as a way for better mental health. Number two, don't go to bed within 2 hours of eating, minimally. Max, best case, 4 hours to let all that food digest before you go to bed so it doesn't give you acid reflux and potentially cancer. And the third item I'd like to focus on today is encourage you to try to maintain the same sleep schedule for 2 weeks. Time to go to bed and time to wake, because it'll get your body into a circadian rhythm from which I think you'll find it'll be a healthy circumstance for you. At any rate, we look forward to action for today, which I think will be up. It's already up 300 points pre. Tesla's actually up $6 pre-market and sort of recovered a bit last night. But I think that we've entered the new norm of how bots control what does and doesn't happen with the stock of everybody, especially the high PE companies like Tesla. At any rate, thanks once again for joining us. Tschüss, German, au revoir, French, Leith, Hebrew, Hoda, Hafez, Farsi, Trais, Russian, Ni hao ma, Chinese, Konbanwa, Japanese, Arrivederci, Italian, Salam, our friends from Muslim countries, Namaste, Hindi, and in Jamaica we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.